So Powell's going to be facing the reality that the economy is much weaker or in recession, but that inflation is stronger than expected, that inflation is going to be rising just as the economy is falling. And the one thing that the Fed has no contingency plan for, that it simply hopes doesn't happen, is exactly what's going to happen, and that's stagflation. But I think the markets are also overlooking a big factor, because the currency markets, I think, were still trading before Trump won under the false narrative that we had a strong U.S. economy, that we had the strong labor market. And that was part of what was underpinning this dollar, because there was a perception that the U.S. economy was in better shape than the rest of the world. And so the Fed would not cut as aggressively as maybe the ECB or the Bank of England or other central banks. But that was a false narrative. The fact that Donald Trump was elected in and of itself strongly suggests that that was a false narrative. Because if the economy was as good as the markets believed, Trump wouldn't have won. They would have elected Kamala Harris. The fact that they voted for Trump is an indication that the voters were not happy. The number one issue in the campaign was the economy. And because Trump won, that means the economy was bad. If the economy was good, Trump would have lost. But it's not just that. They're already starting the downward revisions, and nobody noticed. In fact, I didn't even notice this myself. And one of the things that she pointed out, I hadn't even heard about it, was on Wednesday of this week, the Department of Labor came out with an announcement that indicates that it's very close to another major downward revision in the non-farm payroll numbers. And this will affect the numbers from June of 2023 up until June of 2024. So an entire year's worth of jobs reports are about to get significantly revised lower, probably by more than 1 million jobs, maybe 1.2, 1.3 million jobs that the government initially reported were created. It's now going to say, oops, we're sorry, they weren't created at all. Now, again, if you remember, as these jobs numbers were coming out and they were being heralded in the media, by Wall Street, by the Biden administration, as showing how strong the labor market is, I kept saying these numbers are meaningless because, number one, they're going to be revised in the future. I specifically said after the election, when there was no longer a reason to sugarcoat these numbers, to try to elect Biden or Harris, right? We could get the truth. And it's starting to come out. There's going to be this huge downward revision to a year's worth of numbers. And of course, there were other reasons that I said these numbers should be taken with a grain of salt, because of the quality of the jobs, the fact that they were all government jobs. And by the way, I'm sure that when they do these revisions and they knock off maybe 100,000 jobs a month, they're not going to revise the government numbers down. They're going to revise the private sector, because after all, you would expect that the government at least knows the jobs that it created itself, right? I mean, that's easy, right? The government just takes a look at the people it hired, right? So those numbers are probably accurate. It's the private sector jobs that are completely inaccurate, especially when so much of it is based on a guess, right? I talked about that with the birth-death model, how, they just seem to grab these numbers out of a hat. So it's going to be even worse, because all the job losses are going to come from the private sector. And so now the percentage of the jobs that were created that were from government is going to be even bigger than before. And again, remember, these are the non-productive jobs. These are jobs that we don't want. These are the very jobs that Donald Trump says he wants to eliminate. Great. But of course, if we eliminate all these jobs, right, a lot of people are going to be unemployed, because we're going to be getting rid of most of the jobs that we just created. Now, that's a good thing in the long run, but obviously in the short run, it's not going to be good for all these people who find themselves unemployed. and can't make their mortgage payments or all these other things. Of course, we can't fire them. So if they had to get severance pay, they may be able to make these payments for a couple of years before they ran into trouble. But the point is, the weakness of these reports is going to be even greater when we eliminate so many of the previously reported jobs. I mean, think about it. I don't remember what the estimates were, but I looked at some of the numbers. Like June of 2023, the government said we had 240,000 jobs. Now they're going to probably say, oh, it was 140,000. In July, it was 187,000. And they'll come back and say, oh, that was just 87,000. Those are big differences. It's most likely that if you reduce any given month by about 100,000 jobs, that you're going to end up turning a job number that was a beat because it was above estimates, and it's going to end up being a miss because it was below estimates. So it means all of the headlines were wrong. The market reaction was wrong, right? If the dollar rallied, if gold sold off, if the market rallied based on a beat, but it wasn't a beat, it was a miss. And to the extent that it was a miss, it's an even bigger miss than that. So this is proof. I talked about Powell specifically because when Powell was questioned in these press conferences, he kept talking about how we have this super strong jobs market, labor market. He was basing it all on these government numbers. Well, it turns out the government numbers were completely wrong because they're revising them down. So is Powell going to come back and say, well, I guess I was wrong? We didn't have a strong job market? I mean, I was pointing out in real time that the Fed should not make any policy decisions based on government numbers because the government numbers are inaccurate and they're also biased. There's a political agenda behind these numbers, and the Fed needs to recognize this. No, but the Fed was making policy decisions based on inaccurate numbers that are going to be revised. So what, does the Fed now have to go back and revise its monetary policy, go back a year and say, oh, we should have done this because the labor market is a lot weaker than we thought? What's going to really surprise Powell in the next year is going to be the realization that the strong economy, or the economy that he thought was strong, was in fact weak. And, he refuses to acknowledge that because one of the questions, and I talked about this in a previous podcast, but one of the questions he got from a reporter was, what did you learn from the election? What does that tell you about what people think of the economy? And he refused to comment. Now, maybe he refuses to comment, but he didn't, not think about it. I mean, how could he not think about it? He sees the results of the election. It's got to dawn on him that this must be a rejection of Bidenomics. It must mean that the economy is not as strong as we thought because the voters don't want to continue this economy. I mean, if it was a strong economy, they would want it to continue, right? Who doesn't want more of a strong economy? The fact that they wanted to throw the bums out and that the economy was the number one issue is going to show Powell, that maybe I'm wrong here. Maybe the economy isn't as good as I thought. Well, now the numbers are going to confirm that the economy wasn't as strong as he thought. In fact, we're going to be in a recession pretty early. I mean, I've been saying that the economy was in a recession pretty much all of last year. Maybe they'll start to revise down the GDP numbers as well as the non-farm payroll numbers. So Powell's going to be facing the reality that the economy is much weaker or in recession, but that inflation is stronger than expected, that inflation is going to be rising just as the economy is falling. And the one thing that the Fed has no contingency plan for, that it simply hopes doesn't happen, is exactly what's going to happen, and that's stagflation. So I talked about the government job revisions. And, after Danielle DiMartino Booth told me about it, because I hadn't heard about it, I went to search the internet, and there were really no articles written about it. So it's just completely under the radar. I found one blog that talked about it. But other than that, Even Zero Hedge didn't do an article on it, but nothing in, the mainstream media to point this out. Now, maybe the left wing media doesn't want to highlight this because obviously, this makes Biden look bad. But once they start doing these type of numbers when Trump is president, believe me, the media wanted to whitewash the economy when Biden was president. They wanted to pretend the economy is great. Believe me, they can't wait to report on a bad economy once Trump is in charge. In fact, the whole narrative is going to be that the economy was great when Trump inherited it, and now he wrecked it, right? So that now we're in this bad recession, but it's all because of Donald Trump and his policies, right? That's the narrative. They've already got that scripted, and they can't wait to do it. But there was no media coverage at all of this negative news story. That's why I didn't even hear about it. And then I tried to do more research. I actually found the government report from the BLS that is online, but I didn't find any articles that really linked to it. But they're going to come out with these official revisions. And maybe they're going to do that next week. I'm not really sure. But they indicated that this is coming.
Summary. According to Schiff, investors must be skeptical of government economic reporting. He argues that official statistics can be misleading and potentially politically motivated. Schiff emphasizes the importance of looking beyond surface-level numbers, critically examining data, and understanding that reported economic health might not reflect the true underlying economic conditions. Schiff suggests that economic indicators reveal deeper market realities that aren't immediately apparent. He believes the sentiment of everyday people, such as voters' economic concerns, can provide more meaningful insights into economic health than official reports. Investors should, as Schiff recommends, pay attention to broader signals like consumer behavior, market reactions, and public sentiment to understand the true state of the economy. Schiff warns investors to prepare for complex and unexpected economic scenarios. He points out that traditional monetary policies might not effectively address emerging economic challenges like stagflation. As Schiff sees it, successful investors should maintain a flexible approach, diversify their investments, and be ready to adapt their strategies when economic conditions deviate from standard expectations. Having a robust, adaptable investment strategy can help navigate the uncertain economic landscapes that Schiff frequently discusses.